When it comes to the question of what gives our currency value, people normally assumed it was backed by gold into recent years here in the United States. Now it's more readily understood that we have a fiat currency, which means that it's only a currency because the government decrees it as currency and enforces that decree. Even though the currency is decreed to be legal tender, it still has this opportunity cost. Therefore, people normally have the option of storing their wealth in other assets. Due to this fact, if a government ever decides to expand its money supply further than the goods and resources require, people tend to find other venues of investment. Therefore, when a nation puts itself in a situation where it has to expand its money supply far beyond the requirements of goods and services just to throw into a financial black hole, leads to high inflation and or hyperinflation by people abandoning the currency through international finance and trade or rush to hard assets. Here in the United States, our currency plays a special role as a reserve currency, as if it was backed by some type of valuable commodity or asset. Now, up until August 15th, 1971, we had the Bretton Woods system, which other nations had their currency pegged to the dollar, and a dollar was redeemable by gold. Now, other nations' currencies are still pegged to the dollar, but now the valuation of the dollar is closely based to the supply and demand factors of oil. This is accomplished by pricing oil internationally in dollars, forcing other nations to hold dollar reserves just to purchase crude oil for their nation. And on the other hand, it forces oil producing nations to only accept dollars, forcing them to also hold reserves as dollars. This process adds extra liquidity for our treasury market, but it also adds extra moral hazard for our policymakers. And our policymakers had used this wiggling room of extra liquidity by lowering interest rates starting in 2001 that helped propel an irrational consumption craze that spread it internationally. Foreign central banks, instead of raising their interest rates to deal with their irrational consumption craze, they followed suit with the United States and lowered interest rates so there would be no conflict in international exchange rates. And on top of that, they used their foreign reserve dollars and invested it back into the United States through their sovereign wealth funds, which helps propel the irrational craze. A foreign country such as Brazil, Russia, India, or China have the option to take their U.S. foreign reserves and buy other currencies or commodities with those reserves, which will lower the US dollar valuations. But instead, they reinvest their dollars, even through quantitative easing, back into the US market. This puts downward pressure on the nation's valuation of their exchange rate when they choose to invest into the United States instead of reinvesting into their own country by purchasing goods or services with US reserves. This process creates a host of financial problems for the nation that import American inflation. So you have to ask yourself, well, why would a nation do this? Mainly, it's because the other nations see what happens when you refuse to accept the stockpile of U.S. foreign reserves by trying to go to another currency. This can be displayed by the war in Iraq and by the war in Libya and by the coming war in Iran. The things these nations have in common is that they decided to change their reserves and their sale of oil to something other than US dollars. Iraq decided to accept euros, and right after that, we decided to invade Iraq. Libya decided to sell their oil for gold, and right after that, we invaded Libya. Right now, Iran is trying to accept a basket of currencies other than the US dollar for their sale of oil. And you will find that the enforcers of this petrodollar decree would invade Iran. This is a coming war. Unless Iran decides to play ball and only use US dollars.